Your global macro fund, credit fund, is outperforming 98% of its peers year to date, and part of that is the short on Argentina. I'm curious as to what you've done with the reprofiling now, and again, this morning, just more news, again, Mauricio Macri asking creditors to push out the length of their securities even further to help the country. What are you doing with your securities?
We think we are getting into an environment where active management can make a difference. In the last 10 years, with the surprise of QE, essentially all assets went up. But this year, and to some extent also starting from last year, we're starting to see the weakest countries or the weakest companies falling off, so restructuring their debt, not being able to pay. So we had all the bond universe go up, but now one by one, the weakest rings in the chain are getting hurt. In the case of Argentina, we've always been a bit skeptical, in particular because we saw that positioning across the emerging market investor space was very long and very hopeful, despite polls showing a 50-50 probability between the opposition and the current government. We didn't expect such a big negative surprise, but we continue to have a small short bias to Argentina. We think there's other opportunities in the world which are probably less under the radar, like Ukraine, for example, or Egypt in emerging markets. In DM, in developed markets, we still like Italy with a repricing in BTPs, in the sovereign bonds with a new government, but still a lot of wide spreads, a wide premium on corporate and bank bonds. So there are areas, there are niches where you have positive yield. Everything that has positive yield has a lot of risk. And we have found this year that our longs and short strategy has paid off.
Right, you mentioned banks and Italy. Do you mean Italian banks, or did you mean Italy bonds and banks more generally in Europe?
Generally, the corporate and bank bonds, which are a bit more linked to the cycle, so high yield bonds in the US, but also in Europe, and particularly in Spain and Italy, in countries that are a little more linked to China exports and have less government stability. These things are still interesting, but you have to position for an improving sovereign backdrop. In the case of Greece, for example, new elections confirmed a pro-reform government which has lifted capital controls, and risk premium has come down substantially. Now we're seeing a similar story in Italy. Populations which flirted with populist economics are realizing that these don't work. So you're having a post-populist government in Greece, a post-populist government in Italy. The UK is still going through a populist phase with a potential hard Brexit. So it's a paradox, but the situation in Italy is now more constructive than the situation in the UK, which is something I would have never thought 10 years ago.
So help me understand why money flowed into BTPs then, Alberto.
Well, if you think about Portugal or Spain, Portugal has 135% roughly debt to GDP. Italy has the same ratio, but the problem in Italy was unstable government and lack of reforms, especially around the banks, around the legal system, and therefore investors were always skeptical. If you think about 10-year bonds, they are around minus 70 basis points. 10-year Portuguese bonds are at zero, and so is Spain, and Italy is still just below 1%. So in absolute terms, that yield looks relatively low, but on a relative basis, you have a very wide spread. And if the country has a pro-reform government like the one that is coming into place, then you have a chance for a virtuous circle. The other thing is bank bonds and corporate bonds. Those are trading at 7-8% yield. They're much more interesting, but you have to know which names you're buying.
Do you want to give us a couple?
Well, if you just think about the largest banks, the national champions like UniCredit, Intesa, Santander, or BBVA, these are bonds that give you between 300 and 600 basis points, so between 3 and 7% additional premium, additional yield, depending on how down you go in the capital structure. So they're still interesting. Obviously, the medium-sized banks and the small banks will have a consolidation process. Interest rates are going to stay low, but the large banks will probably survive and do well.